Hello friends, this is Raj Sakri from Raj Option Trading. Today is May 17, 2022. Hope you're all doing well. In today's segment, we'll take a look at top cloud and software stocks to buy. So with that, we got a company here, Salesforce.com. It's a Mark Benioff's company. Stock has been having some trouble here. It's been coming down, but it's a great long-term play. So we'll look at many of these smart stocks like Salesforce and many more. So with that, let's jump in. We'll start with a quick market update, look at most active ETFs. The most active ETFs will give me an idea where the market is headed and what sectors and ETFs to invest in. That's a good way to gauge the market. And then let's look at top cloud and software stocks to buy, and let's finally conclude with few top picks where we can buy for long-term investment, and also few stocks we can buy put options for a short play. So with that, let's jump in and get started. Look, we got few stock news here. We got Carvana, which was a top stocks. It was $200+ stock. Now it's barely double digit. So we look at stocks like Carvana and see how to play and go from there. And then we got one of my favorite here, gaming stock, Take-Two Interactive. Looks like they undershoot Wall Street expectation, but I think it's a good one for the long term. You could buy and sock it away. And then we got Affirm, stocks like Affirm. One day they shoot up big time and then come down. We should do fading game here and buy some put option when a stock like Affirm goes up big time here. And then you got Buffett. Warren Buffett is bulking up on energy holdings. As you can see here, he buys Chevron, he has Occidental Petroleum, and so on and so forth. So he's buying a lot of stocks. It's good to watch what he's doing and see if we can get some ideas from there. And from a market perspective, nothing much is going on. Look, Dow Jones Industrial up slightly, not too much. Nasdaq down big time here, and S&P 500 also down, for the day yesterday. And look toward the close here, Dow Jones Industrial Average started coming down, and Nasdaq tanked, and S&P 500 tanked. So this is where market does not know what to do. It goes up and down. Even if you look at the futures market, it tends to go up sometimes and comes down. There is no decision-making power in the market. It's hostage to various criterias like macro conditions, like geopolitical tensions, interest rates hikes, and Fed, and so on and so forth. All right, now let's jump in and look at the futures market. From a futures market perspective, look, futures are opening up to be a little bit on the better spot here. Dow Jones Industrial Average right now pointing to 331 points gain, and we got S&P 500 pointing to about 1.35% or 54 point gain, and same story, Nasdaq is up nicely, 1.74% or 212 points up here. Russell is also up, so we'll see how it goes. Market tries to bounce back here. This can have some legs here. As it goes higher, we can slowly start buying some put options. As it comes down, you can do long play. We should play a long and short game with this market here, because it's trying to decide where to go. It will have some good days. Looks like now the trend is up here. We can play some up or a swing trading long type stock here. But when it comes down, when it's exhausted, we could play buy put option game here. That's how this market is set up. We got to be playing the both sides of the house. And look, we got gold here. Gold could be a good one here. It's been coming down off late, trying to gain this momentum here, but still it's a good one to buy here. Crude oil is going high. I would not touch crude oil here, but if it comes down, I might pick up some crude oil. Crude oil is also good to buy some put options when it's high, so then it will come down. Then you can sell it off. And look, bonds are also deciding where to go here. Bond will have downward pressure here as the central bank starts selling bond and tapering down. This can go down, and that will have impact on the interest rate, and interest rates can go higher, can cause stock market some trouble. All right, now let's jump in and look at the fear and greed index. Look, fear and greed index is really in the extreme fear zone right now. That's why money is pouring into the market. We could go to the fear zone and then probably will come back to extreme fear. That's how it's fluctuating these days. It's a trader's market. All right. So if you're a long-term investor, buy, when it's extreme fear zone, put some money into the market, you will do great. All right. Now let's look at most active ETFs. From a most active ETF perspective, look, if you look at the year-to-date picture here, how much stock market is, ETFs are up or down for the year. Look, from a 52-week high, most of these ETFs are down big time here. That tells you right now we're in the negative or the bearish zone right now. And if you look at the 1 day here, most of the ETFs are down in 1 day, with the exception of energy, and mainly energy is up here, and maybe gold and precious metals, as you can see here. And then you look at the long-term picture here, 5-year and 10-year, see what sectors are doing great. You can clearly see here QQQ did great in the long term. Short term pain, if you're a long term investor, basically tune out the noise and buy some QQQ, you will do great. And look, we got XLF Financial, same story, did great in long term. Right now it's in big pain here. You could buy some financials also here. And as you scan through the list here, we got XLI or industrials having some trouble right now. Long term, it's a good one to buy. And then you got XLV or the healthcare, same story. You could buy some healthcare up here, or XLV, you'll do great. As you scan through here, you will see one more right here, SMH, one of my favorites here. Semiconductors is a tough market. You could go with a broader basket like SMH here. Look, long term, nice gain here. You could buy this one also. And then you got consumer staples or consumer discretionary, XLY, same story. You could buy some XLY here. And look, we got XHB, home builders, down big time here. You could buy some home builders also here. All right, now let's jump in here. Look at the stock news in the software area. Look, we got Amazon.com here. They replace Microsoft as Seattle's top corporate giver. That's a good news for Amazon. Looks like they're opening their wallet and giving some money away. That's a good one here. And then you got Accenture. I love Accenture. It's one of my top stock here. You could take advantage. Right now, stock is beaten down. You could buy it for the long haul. And then you got Adobe, Okta, Amazon, all done big time. According to Motley Fool, these stocks are good. They will bounce back pretty soon. I think these are the good ones here. And then you got my favorite, Salesforce.com. They've been acquiring very, very nicely and selectively and growing their accounts and their top line. They acquired Tableau a while ago, and they acquired Slack. I think it's a great one to buy here. Mark Benioff knows where to take the company. And then you got SAP, Steady Eddie company. It goes up 2 steps, comes back 3 steps. Right now it's sold off big time here. You could buy some SAP software. It's a good long-term play here. And I love Intuit, completely sold off here. This used to be a rock star a while ago. You could take advantage and buy some Intuit here. And ServiceNow is a good one here. It's sold off big time. A little bit high price to sales ratio or valuation, but long term you'll do well. And then you got Infosys, Indian stock. It's a good one here. It's completely beaten down. You can buy this stock at $10 right now. It's a good one to buy for the long haul. And then you got stocks like Airbnb and Palo Alto Network. Both are great one here. Airbnb is a little bit pricey from a valuation perspective. Palo Alto Networks is a great cybersecurity play. You could buy both and take advantage of this secular growth as we go forward. All right, now let's look at top software stocks. Look, we got the list here from a top software stock perspective. We got Microsoft at the top here. It's a big company. Look, it's a $1.9 trillion company. Even up here, it's growing their top line. Look, top line growth is going up by 20%. That's a great one here. And look at the net margin. I love it. 38% net margin. That's the software net margin we're talking about. And look, from an expectation perspective, analysts are expecting nice growth next year from an EPS as well as revenue perspective. That's why it's one of my top pick here. And then you got Adobe. Adobe is completely sold off here. Now it's getting some traction, as you can see here, in 1 day and 5 day, at least 5 days jumping up here. At these levels, you could buy some Adobe comfortably and go from there. And we got a few more here. I love Oracle as well as Accenture and CRM. You could take advantage and buy these great companies. And look at the double-digit earnings growth as well as EPS growth. EPS and revenue growth. Looks like Salesforce has got better prospects here with both double-digit EPS growth as well as revenue growth here. And the list goes on here. Keep a watch on the net margin here. I love the stocks making double-digit net margin. Those are the great ones you could invest in. Look, we got a few more here. We got SAP and Intuit, same story. Double-digit sales growth here. You could buy them and go from there. And I also like nice and high overall score here. Look, we got a few here. Autodesk and Cadence and so on and so forth. You could buy these names, take advantage. We got one more Indian stock here, Wipro, just a $6 stock here, beaten down. Look at the nice performance in 2 years and 5 years. This also pays a good dividend. You could buy that one too. And we got Cadence here, one of my favorite companies. Look at the performance here. They've done great in 2 years and 5 years. 5 years, 320% here. You could also buy Synopsys, one of my another favorite stock here. You could buy that one too here. Nice 361% performance, or is it 261% performance in the last 5 years. All right, now we got one of the great stock here, Trade Desk. You could take advantage and buy some Trade Desk here. And also keep a watch on the valuation. So if your valuation is very high, for example, you got one right here, Snowflake. On the good days, I would buy some put option and play the fading game here. This will come down after a while. You could make some money. So that's how I play it for the high octane stocks or high valuation stocks here. And we got one more CrowdStrike here. On a good day, you could buy some put option and make some money off of CrowdStrike, given there is a high valuation. And same story with the Datadog here. At this time, market does not like these high octane stocks. You could wait for a good day, look for an exhaustion pattern, and then buy some put option. All these three stocks here, CrowdStrike, Datadog, Trade Desk, and even Snowflake, you could play that game and buy some put option. All right, now we got let's keep going here. We got a few more here. The list continues, as you can see here. Look, all these companies have got nice, many of them have got nice net margin here. Some of them have got negative net margin. Look, we got Zscaler and Cloudflare, negative net margin here. And also one of them here, Cloudflare, has got negative free cash flow. Stocks like this, you could play buying put option game and make some money, because these are high octane stocks and they still have negative net margin. You could you could buy put option and play the short game on these names here. And keep watch on the RSI here. When the RSI is super hot, here we don't have any super hot RSI, but generally when the RSI is high, like we got EPAM Systems as an example, stock has been beaten down big time. Now it's good time to go higher. RSI is slightly higher. For these also you can do some put option or a put spread game here, because they tend to go higher and then come down after a while. You could play that game here when the RSI is more than 50 or so. All right, as usual, keep look at the overall score here. Higher the better. If the overall score is lower, like Palantir as an example, that may not be a great stock to own for the long haul. Focus on the nice and high overall score. You will do very well. All right. Now let's look at a few more here. We got a few more. Look, we got stocks like Zen Desk here. Zen Desk, as you can see here, it's still not making it net margin negative, and overall score is relatively low here. It's one of the high octane stock. Look, price to sales ratio is 8 here. Stocks like this also, when they go up big time, you could buy some put option and do the game of shorting using put options. And we got Bill.com and AZPN, both high octane stocks with high valuation. And look, we got Bill.com, price to sales ratio 21 and a lower overall score, and Bill.com has got negative net margin. You could buy some put option in stocks like this in this market and play the short game here. And the list continues here. Keep a watch on the overall price to sales ratio. When it's higher, buy some put option. Don't need to worry. These stocks will have some issue and they will come down. You can make some money that way. And also keep a watch on the net margin. If you're a long-term investor, go softer double-digit net margin companies. We got few stocks here. We got Dropbox and Manhattan. Both are good ones here. I would like the one with the higher overall score, which is Manhattan. That's a good software company. All right, now let's jump in and look at a few more here. Look, the list continues here. Keep a watch on valuation as usual. There are a few high valuation names here, like Sentinel, which has been going down off late. You could play the short game here, buy some put option stocks like this one here. And we got a couple more with high valuation. Look, we got one here, DLO, with high valuation. You could play the same game here. Stock has been coming down big time. Long-term investors look for nice and high overall score. We got one right here, EFT, one of my favorite stock here, Euronet. Stock has been down big time. You could play long game with stocks like this one here and you do well. And we got one more right here with the nice overall score here. I think it's this one, Mime. Mime is one of my favorite trading stock here. A little bit high valuation as you can see here. And look, net margin is barely positive here. You could look at such stocks when they're down for a long-term play here. As usual, keep a watch on the priced RSI here. When the RSI is super hot, for example, you got few ones here, CDK, and we got few more. You could look at buying some put option here. They normally cool off. Then you can make some money off of these stocks like CDK, MSP, and so on and so forth, because they're too super hot here. You could make some good money. We got one more here, Switch, same story. Keep a watch and see and make sure these are not acquisition type candidates here. Then you can buy some put option here. All right, so with that, what we'll do now is we'll look at few names here. For the long ideas, you could go with the Microsoft here. Microsoft is a good long-term play here, and you could do Adobe and Accenture and Synopsys. And for the short game here, you could go with the Team, Net, and Bill.com. So what I will do is I will take you to Thinkorswim for TD Ameritrade. We'll look at one long stock, for example, Adobe here, and maybe we'll look at one more CRM, and we'll at the short ideas like Team and maybe Bill.com. So with that, let's jump in here to Thinkorswim platform from TD Ameritrade. And let's bring up the chart here. So I'll bring up here a chart. First, let's look at Adobe. There we go. So Adobe software, as you can see here, stock is having some pain. As you can see here, it's a great stock, but off late, look, it's coming down, and now it's trying to go higher, as you can see here. And look, stock is trying to go higher. The blue line in the DMI chart went above red line. That's a bullish crossover for the technicians. And look, smart money is pouring into the stock here, and on the balance volume is going higher. It's saying, hey, the road is clear. You could buy some. So what you could do here, you can go into the trade tab here. If you want to buy the stock outright, you could buy them. Otherwise, you could go here and bring up Adobe. We got it right here. And what you could do is we got here 122 days out. You could go there. Look, Adobe, as you can see here, stock price is 402 here. All-time 52-week high is 699. Look, that's a $300 type difference here. It can still go nicely higher. And I would typically go 122 days out here. You could go here. And if you're a conservative investor, you could do just a small call spread here. I call it in and out spread. Look, stock price is 402 here. You could just go here. You could do 400, 410, this spread right here, $10 spread, and you could play there and go from there. Or if you're a little bit, if you have a little bit more money, you could play $20 spread. That's the better one here. 390, or actually, 390 and 410. That could be a better bet. So depending on your nature of aggressiveness, if you're an aggressive buyer, you could do 400, 410. Let's do that right now. Buy, and you could do a vertical spread here. There you go. Buy vertical. All right, so we are doing 400, and let's do buy 400, and actually let's do this. We are actually buying buy vertical. There you go. We are buying 400 and we are selling 410. Let's do that. There you go. It's a $10 wide spread here. Let's cancel this out. It's all right, let's do here buy vertical. So we are buying 400 $400 call option here. Looks like we're on the let's see here, we're on the put side of the house. That's what's going on here. Let's go to the call side of the house right here. All right, so we are buying vertical spread here, and look, we are buying at 400 call, 400 strike, and we're selling 410. So it's a $5 wide spread. As you can see here, we are paying 515 dollars, and remaining portion of the $10 wide spread, around $5 is your profit potential. You could confirm and send here. Look, it's a good, buy, double your money type play here. You're paying for $515 and you're making $485, almost double your money here. It's a good bet. You could go with this one. Your break even is 405, which is slightly above the current price. That's why it's slightly aggressive here. You could go with this. You got a lot of time here on your favor. You got 122 days out in the future here, and that's a good time frame. This stock can bounce back. It's a big price dollar amount stock here. Instead of buying the stock outright, now you're just paying. See, look, you're just buying, you're playing with the $515 to control 100 shares of Adobe. That's why it's one of my favorite play. All right, so if you're a little more aggressive, what I normally do, I do back ratio spread on stocks like this one. You could just go here and buy a back ratio spread here, right here. Look, I'm betting this stock will go higher. That's why I'm buying 410, which is a little bit out, right here. Look, 410 right here. It's above the current price here. I'm buying 2 call options at 410 and selling one call option at 400 right here, 400. So that tells you, you're financing your additional buy here at 410 by selling a call option at a higher strike price, at a lower strike price. So that's one of the way to play it. So you want stock to be going higher. So if I take you to here, analyze trade tab here, very quickly, look, we got September 16th, that's the expiration date. I could change the date here to September 16th, right here, September 16th. All right, so if you see here, nice payout diagram here. As the stock goes higher, when the stock goes higher, you can make some good money. Look, the chart is going higher, and if the stock is at 410, if it stays put there, you lose some money. But otherwise, if it goes higher or if it goes lower, you'll still make some good money. That's why the ratio spread is my favorite play here. Ratio spread, you can do it when the volatility is high. As the stock goes higher, you'll make some good money. If the stock stays at your your bought call option here, which is 410 here, that's when you will end up losing some money here. But otherwise, you will do great here if the stock goes higher. That's why for the long-term play here, I normally go with the ratio call spread. You could do very well with this one here. All right, so that's the that's how I play on the long side. Now what we'll do is we'll look at maybe one more stock here for the short term here. Look, we got short play. I love to do short play on stocks like Bill.com here. You could go back to Thinkorswim platform here, bring up Bill.com right here. All right, Bill.com. All right, look at Bill.com here. It's as you can see here, coming down big time after the earning. It's trying to decide where to go here. I want to go a little bit higher, but coming down here. And look, from a DMI perspective, red line is on top, blue line is on the bottom. That's bearish, and smart money is slowly flowing in. And look, volume average is down big time, trying to improve. So that it's still money losing company. When the stock jumps higher on a in a day, that's when I look at some exhaustion pattern and then buy some put option. So you could do same thing here. Look, we got Bill.com here, and look, we can go 94 days out. That's good here. And you could look, our stock price is at 109. You could go right here. You could do 110 if you want, and buy put option right here. It's a little more aggressive. it's a little more aggressive, as you can see here. Looks like a lot of people are buying put option at $100, sorry, 105. You could do that too. You're paying $17 to buy this put option. As the stock comes down, as you can see here, your break-even point is stock has to go below $87 to make money. That's why it's a little more aggressive. You could go less aggressive with the put spreads here. So $110 stock here, you could do 110 and 100. You could buy this put spread here. Let's do it here. So you could do just like this, buy vertical put spread here. You're buying 110, which is at a higher price. You're selling 105. You're paying this $235. As the stock comes down here, look, you're paying 235 to make 265. It's a double your money type game here. You're playing with a small amount of money. Your betting bill.com will come down, and you got 94 days of time here. That's a lot of time. Bill.com goes up and down, so you could make some money here. Normally I do this for a fade trade here. When the stock goes up big time, that's when I do this one here. If you're super aggressive, you can also do a ratio back spread. That's one of my favorite strategy for high octane, high valuation name here. So you could go here and buy a back ratio spread here, and what you're doing is you're selling 110 put here at a higher price, and you're buying two lower price here, 105 put here. So look, you're paying $15 here. And if I go back to here, analyze tab here very quickly. All right, so let's change the date. Let's see, 9/16. I think we got the date here, August 16th. Let's change it to August 16th here. All right, so let's go right here, August 16th, 19th, right here. So look, this is our payout chart here. As you can see here, as bill.com here, as it comes down, we will start making big bucks. So our maximum loss is at right here at 105. That's where we sold our, we sold our two put options. If it stays at 105, we lose some money. But if it goes below 105, keeps going down here, we will make some good money. That's why I like playing this game here with with this ratio back spread, betting the stock will go down, especially the high valuation names here. So with that, let's jump back here. So in a nutshell here, for the long plays, go after these stocks here: Microsoft, Adobe, Accenture, CRM, and Synopsys. You could play the option game with the call spread like we talked about. You could also do the call back ratio spread. My favorite place here. Also, you could do buy call option outright, and for the short play here, go with these names here: Team, Net, Bill.com, especially when they go up on a day. Then you can fade the trade with the buying put options or put spreads. Also, if you're super aggressive, go with the put back ratio spread. So with that, thank you very much. Happy investing and trading. Please subscribe.